The Dow traded in an indecisive manner over the past week. Notice all the flat trading dojis. That basically tells you there was indecisions going on between the bulls and the bears. And where was it occurring? Right at the same level the markets peaked out before. That indecision provided two situations. One, they're either taking it higher, or two, they're taking it lower. That seems fairly simplistic, but when you see dojis, they're either going to move it positive or move it negative from that direction. And in this case, because we were still above the T-line, it was pretty evident that today's trading told us that this indecisive area was just a consolidation stage during the uptrend. But the NASDAQ traded relatively indecisively today. So what's that mean? Well, usually when you see one index trading higher and the other one trading flat, that pretty much tells you there hasn't been a change of investor sentiment. They're just shifting funds. So currently, you still have to maintain the fact that we're in an uptrend because we're above the T-line. So you stay long until you see a dramatic sell signal, and not a dramatic sell signal in just one of the indexes. When there's a change of investor sentiment about this market, there's going to be a sell signal in all three indexes, the Dow, the NASDAQ, and the S&P 500. As long as we know there's not a major change of investor sentiment that might bring some fear or some bearish sentiment into the markets, the patterns that are working well will continue to work well. For example, on our recommendation on DISH, notice how this came out of a fry pan bottom, and our expectation of a fry pan bottom breakout is a good strong price move. Then what do we expect after a good strong price move? In this case, some profit taking. But notice how it was indecisive on the profit taking. A bunch of dojis in here, and then we see another buy signal, a morning star signal with a left-right combo, and then a breakout through this level, and kind of a scoop pattern right here on the T-line. So the more elements we can put into our analysis that we are probably heading in the right direction, the higher the probabilities we're not only going to make a profit, but an inordinate profit, a bigger price move than what we would normally find in just an uptrending stock. That same simple analysis can be applied to the recommendation of WTI today. Notice the reoccurring patterns that occur in this chart pattern. There's our scoop pattern. And where did the scoop pattern bottom out? Right here with a long-legged doji, a bullish engulfing signal, left-right combination, smack dab on the 50-day moving average. Where's our next target? When it comes up through the T-line, it should hit the next resistance level, which is the 200-day moving average. So comes out of a scoop pattern, strong price move. What do we expect after a strong price move? Some profit taking. As we can see, this one could not get back down below the T-line. The T-line crunch pushed it back up through the 200. Simple rule of thumb. If a moving average or a resistance level is hit the first time, when it comes back the second time, it's going to go through. When it went through here, we now have a J-hook pattern setting up, which told us that we have a J-hook pattern, number one, which meant our next price move would be the same as this price move right here. Number two, the T-line crunch told us we are pushing up through a resistance level. Number three, yesterday's close through the resistance level told us the 200-day moving average wasn't going to act as a resistance anymore, that our upside move had a high probability aspect to it. This is not rocket science. This is merely analyzing what chart patterns do based upon the reoccurring investment sentiment that the Japanese rice traders were able to graphically depict for us, and this is just common sense put into graphic depictions. That'll be it. We'll see you in the chat rooms.